Hey guys, Jared Wesley here of Live Traders and back for another weekly lesson, guys. This week's lesson is going to be on pre-market charts and the value of pre-market charts and how you can use them to your advantage to make more money, particularly for those traders that like to trade the open, especially the first 30 to 60 minutes of the day. So let me talk just for a quick second, guys, before we get over to the computer, because I do want to show you a couple trades that I took. One yesterday on Facebook, beautiful 3-bar play. I'll show it in a second. And another one today using pre-market charts on Netflix. But guys, pre-market charts, the reason these things are important, guys, is because we are mostly gap traders if you're trading the open. So let me give you just a brief rundown of how my morning goes, because everybody's been asking me a lot of questions about how I find these ideas and how I find these trades. So I get in front of my desk at about 8:45 New York time, market time. I scan dollar gainers and dollar losers, okay, in the pre-market for about 15 minutes, 10 to 15 minutes, okay? And right around 8:55 to 9 a.m., I put this gap list out. So quick, guys, I look at about 300 or 400 stocks on a list of dollar gainers and dollar losers. But here's the thing. If a stock has 0 in volume in the pre-market or only a few hundred shares, I will not look at it. So when I see those 300 stocks on the dollar gainers list, I might actually only look at about 50 of them, okay? And of those 50, I'm going to dwindle them down to about 5 or 6 that I like on the long side and about 5 or 6 that I like on the short side. So my entire morning watch list, after looking at 200, 300, 400 stocks, comes down to about 10 or 15 ideas. Now, the next question you're all thinking is, well, how do you dwindle them down? What criteria? Professional trading strategies, guys, that's how it is, okay? There's a lot of criteria: level 1 gaps, level 2 gaps, level 3 gaps, where it's gapping from, where it's gapping to, the kind of volume it has, the relative strength, the relative weakness. There's a lot of different factors in how I choose those gaps. So at 8:55 to 9 o'clock, I have my entire list put together. I'll add 1 or 2 from 9 o'clock to about 9:20 because a few more will pop up. And then what I do is I take those 10 or 15 stocks and I put them on what I call my favorites list. So of those, say, 15 ideas, I might have 4 or 5 favorites. Those are the ones I'm laser focused on. Now, there's a method to my madness here. You thought, well, geez, Jared, you're talking about pre-market charts, then you jumped off into talking about gaps. Now we're going to put them together, okay? So how do I determine my favorites list is the $64,000 question. How do I take those 15 gappers and then choose the 5 best? It's called pre-market charts. I use pre-market charts, guys, to get those early quick entries. Like, for example, take a look at the slide on the screen on Netflix today, all right? Netflix had a gap up that was decent, but not amazing, just decent, okay? But what I loved so much about Netflix was the pre-market consolidation at $344. I told the chat room, guys, at about 9:05 to 9:10, guys, I'm going to nibble a very small amount of Netflix at $344 in the pre-market. And when the market opens, we'll look at getting full. We'll look at taking more shares of it. That's exactly what we did, guys. So Netflix ended up breaking the $344 area before the market opened. So we had to rely on a very small pullback. So I got my initial shares at $344, and then I added shares right around $345 on kind of like a 1-minute high, 3-minute high type situation based off of the pre-market chart. So my cost average was reasonable on this. I had about $1.50 on the stop loss, give or take, okay? And I made over $500 on this trade. Now, I should have made $800 or $900, but it popped up, came back down, and my last 1/3 stopped me at break even, a little bit above break even. If that last 1/3 hadn't gotten tagged, we would have made another few $100. As you can see, Netflix finished the day at like $353 today. All right, so I could have made another $3 or $4 on those 100 shares, which would have been an $800 or $900 trade. Okay, with minimal risk. That would be 2 to 1, 3 to 1 on that trade. Okay, that's using pre-market charts. Now, if I look at the Facebook slide that I'm putting up right now, that is a textbook 3-bar play. Textbook 3-bar play on the 2-minute time frame from yesterday. I want you to note, guys, putting this video out today, the trade on Netflix is from today, and the trade on Facebook is from yesterday, guys. These are recent things. They happen every day. So I'm using pre-market charts to help me get into these trades earlier, okay? I'm using pre-market charts to help me get into these trades earlier, okay? And the 3-bar play on Facebook is a little bit different. That's just a textbook 3-bar play, but it was based off of a gap, and that gap made my favorites list because of the pre-market chart, okay? So I don't want to spend too much time on this. I want to head over to the computer, guys, and I want you guys to take a look at this. It's about a 25 or 30-minute presentation on how and why pre-market charts are so valuable. There's a little bit of scanning information in there as well, okay? And it'll show some of the dollar gainers and dollar losers, all right? So I use pre-market charts. It's one of the most beneficial things that I use to help me get into trades in the first 5 or 10 minutes of the day. And it also helps me look and take my 15 or 20 favorites, or 15 or 20 stocks on my favorites list, and then dwindle them down to the highest quality 3 or 4 best of the best. Everybody always asks me, well, geez, how do you get those 3-bar plays? From the gap list, from the favorites list, and then I stare at them on thumbnail charts, okay? I'll put the thumbnail charts up real quick so you can see what I'm talking about. All I do, guys, is look at those charts on the 2-minute time frame, okay? 2-minute time frame, I look at about 10 or 15 stocks, but I'm really focused on my favorites. All right, guys, so let's head over to the computer, take a look at this presentation. It's about 25 minutes, guys. I recorded it yesterday live in the chat room. If you haven't already done so, guys, you can get a 30-day trial in the chat room for $1 stinking. All you have to do is email info@livetraders.com, INFO, info@livetraders.com. 30 days for $1, guys. I think you can afford that, all right? To check out what a real trader looks like who's putting his money where his mouth is, all right? Let's get to it, guys, and enjoy the presentation on pre-market charts. Market puts in red, Facebook should drop. Come on, man. What is going on today? Guys, 1-to-1 on this would be 0.40. All right, 0.40 is 1-to-1 on Facebook. All right, guys, that's 1-to-1 on Facebook. And I kind of missed getting some off there. All right, so Facebook, guys, I'm going to move to a half stop on Facebook. All right, guys, I have 200 shares left of Facebook. So let's try to get that last little bit. I'm going to see if I can get just a little more, a little bit under the half number, guys. Come on, baby. All right, out Facebook, guys, done. I may give this a shot, guys, on Netflix. This is aggressive. There goes Netflix, guys. We will see what happens. All right. I'm going to mitigate down on my risk here a little bit. Okay. I'm just going to ride out. All right. Finally pulling in. I have my stop so that I'm going to get at least, 500 out of this thing. All right. So I'll make at least 1.2 R out of it. I just hope that it pivots here and goes higher so we can get 600 or 700 out of it. Okay. Pre-market charts, guys. So in my opinion, I'm a lot different than a lot of other traders out there for this particular reason. I really don't see many people talking about the benefits of pre-market charts. Okay, and I don't know why. Now, I want to be clear about something. I'm not here to tell you or suggest that you have to be buying these stocks in the pre-market. Well, I'll talk about doing that. Don't get me wrong. We'll talk about that. But I want to talk about how you can use the pre-market range, the pre-market pattern to your benefit. And today will work out well because, well, I nibbled Google in the pre-market, right, at 1,065, and now it's at 1,032, right? And we also nibbled, I think, CRM in the pre-market. So we can discuss those trades as well, but it's not so much about actually just taking pre-market trades as much as it's about understanding how pre-market charts can help you. Okay, so let's take a look at the benefits of pre-market charts. So before I even talk about the benefits, some of you might be asking, well, what is a pre-market chart? It's any chart, any time frame that happens before 9:30. It's from like 5 a.m. to 9:30. They don't really start trading heavy until about 8 o'clock. All right, so when I say pre-market, I'm talking about charts on stocks before 9:30 a.m. market open. Okay, so what are some of the benefits of looking at or using or knowing pre-market charts? Well, they help traders stay out of stocks that will likely pull back at the open. Guys, what was a good example of this today, right? A good example of this today was MRTX, okay? FedEx, MRTX. So let's take a quick look. Let's blow a couple of these up, all right? Blow it up. I believe MRTX is one I'm thinking of. All right, now let's go to the pre-market. See MRTX? Let's push this off real quick. Right there. All that is pre-market. That's all pre-market. So rip, rip, rip. And then it's up in the 90 range, 89 range. Why do you want to buy this off the open when the stock just went $20 in the pre-market? $20. Now remember, this thing also did volume, okay? This bar here has got 30,000 shares. The next bar has, not that many, 4,000 or 5,000. So now you look at this and go, it hasn't done much since then. And you're going, well, it actually has. It went about $5. You get the point, though. You see what it did right off the open? It pulled back because the pre-market was so extended. So if I go back to this, right, it helps keep traders out of stocks that might pull back at the open because now you have the benefit of looking at all the pre-market information, okay? And you're going to see an example of this if I put it in here. I may not have put it in here. No, I didn't put it in here. So you're not going to see it today. Anyway, it helps gives us an idea of how the stock traded before the market opens. So if a stock is up, $10, $20 right before the market opens, let's say it puts in 4 or 5 wide range green bars. Why would you buy that right off the open? It's like saying you would buy a stock in the middle of the day that's up 5 bars in a row. That doesn't make a lot of sense. Okay, the benefits. It also helps traders get into stocks earlier than they normally would have. All right. One of the keys, though, to understanding how to take pre-market charts is looking at the volume. We're not looking at a stock that does 1,000 or 2,000 shares in the pre-market. I'm looking at stocks that are doing 50, 100, 200,000 shares in the pre-market. Why? Because if there's that many shares in the pre-market, 2 things are happening. One, the stock is doing way more than normal volume. Why is this important? Well, this means if a stock is doing way more than normal volume, there's got to be, by definition, institutional money in this. This isn't you and I or mom and pop traders adding volume to these. It's institutions. So I always use the analogy with the whale and the shrimp. Guys, you don't want to get in front of the whale. You want to just ride the back of the whale. Institutions are the big money. HFTs are the big money. You don't want to jump in front of them. You want to get behind them and ride their coattails. So when you see a stock that normally does, for example, 3,000 shares in the pre-market, and today it's got 300,000 shares in the pre-market, that stock will definitely exceed average trading range. Okay? It also makes the pre-market chart far more valid. Right? The higher the volume in the pre-market, the more similar it is to the real market open. Okay? By getting in early, we can take better advantage of the entire move, not just the already extended pullbacks or consolidations. Okay? A good example of that is Google. Let's take a look. Guys, don't get me wrong. It can be done and it worked. But would you rather be in Google at 1065 or at 1050? Yes, there was a 3-bar play here on the 5-minute. But 1065, there's a pre-market consolidation right there. I mean, so much so that I actually typed in earlier. Okay, I'll retype it right now, guys. This was at 9:18 in the morning. Watch Google under 1065 for a small pre-market nibble short. Okay, as soon as the market opened, this thing dropped $10, $15. It's actually $15. So what would be a good plan of action here? Nibble some short at 1065 and perhaps add back later. So it worked at 1050, but it was already down $15. Thank goodness the market continued to tank because it went another $20 lower. All right, so when you look at that, go back to our little presentation here, right? It helps you get in the entire move. You get in a little bit early instead of shorting it $15 later. $15 later, guys. The market doesn't always pull back the way the market did this morning. So looking for pre-market patterns is a good way to nibble some early, and you'll also get a better cost average, okay? I treat pre-market charts like regular charts. If it's an extended pre-market, I wait. I wait for a pullback. I wait for a consolidation. Okay, if it's a non-extended pre-market, then you can get in immediately, assuming it's got a level 1 gap. All right, and Google was not a level 1 gap, and this is why I didn't go full. I went with a very small partial lot. Okay, but what I'm getting at here is simple. Treat pre-market charts like regular charts, assuming they have good volume. If they have great volume in the pre-market, treat it like it's a regular chart. Okay. Now, unfortunately, guys, a lot of people will look at a gap and they go, wow, that's an unbelievable gap, all right? And they want to get in no matter what. And they're not looking at the pre-market chart. Maybe there's a prior pivot high in the pre-market. What if the stock is extended into that prior pivot high? I'm probably not going to want to buy that off the open. But guess what? You didn't even know that that pivot is there, because you didn't look at the pre-market chart. I'll repeat that because it bears repeating. You probably didn't even know that that pre-market pivot to the left was there because you didn't look at the pre-market. So when you get into a 3-bar play at 9:40 in the morning and it pops 20 cents and fails and you go, what the heck? And then you look at the pre-market and that 3-bar play was just below a prior pivot high. That's probably why it failed, okay? Now, some of the drawbacks, okay? If it's a low volume pre-market chart, sometimes it's not an indication of exactly where a stock will open, right? Pre-market is a whippy, wild West type scenario. And this is why the more volume they have in the pre-market, the more reliable it is. The more volume they have in the pre-market, the more reliable it is. I don't care if it's pre-market at 9:28 or if it's regular market at 9:32. Anytime you enter in the first 1 or 2 minutes, guys, it's going to be whippy and spready. I mean, Google dropped $15 in 2 minutes today. I'll repeat that. Google dropped $15 in 2 minutes. So what I'm getting at is this isn't for everybody. If you're one of those people that gets flustered early in the day, too much is happening, you can't quite follow it, then getting in the first 5 minutes of the day, pre-market or regular session, is probably not for you, right? A lot whippier at that time. You could hit a target very quick. You could stop out very quick. You could take slippage. Okay, for me, in my opinion, the advantages far outweigh the drawbacks. Why? Because I feel like I can handle the spread and the whip in the pre-market. I share size appropriately even for slippage. Okay, and you also have to realize too, this isn't some random event, guys. We're not randomly trading stocks. We're methodically, systematically trading stocks. There's a difference. If I'm taking Google at 1065, I'm taking it because there's a pre-market pattern, a pre-market consolidation breakdown, okay? This means that specific patterns, volume, other criteria must be met before entry, no exceptions. Okay, now let's take a look. All right. We've all been there, right? Right here, you have a stock that's gapping over a pivot. It's gapping from a green bar, all right? It's gapping from a green bar. But it's still a nice gap because you're taking out this pivot and you're taking out this pivot, Okay, this pivot and this pivot with room back up to 75 bucks. Okay, so you have a ton of room. This was a stock that was otherwise fairly bearish, and now you're gapping up. So you're looking at the gap going, hey, it's not perfect, but it's pretty nice, right? It's not perfect, but it's pretty nice. This needs to be moved out. There we go. That's better. And that needs to be moved up. There we go. All right. Okay. So this is a top watch list idea. By 9:32, you've already missed a move, and it was the only move of the entire day equals frustration. Now, why is that frustrating? Well, it's obvious why it's frustrating. It's frustrating because how many of these great gappers do you see every day? 1, 2, 3? 1 to 3. You might scan 3, 4, 500 stocks to find 10 or 15 ideas. And of those 10 or 15 ideas, there's only 2 or 3 that you really, really like. And in this particular day, this was one of them. All right? This is how it looks. Market opens, stock pops. That's the 5-minute CRE off the open. That's the 15-minute CRE. Not a lot of opportunity, maybe because of the little shake. Maybe you could have got an opportunity at 66, right? So you missed kind of $3 worth of the gain here, 5% of the gain after the gap. Maybe, but realistically, there's not a lot of opportunity. This stock was just so strong, it just went higher all day long, okay? Unless you saw that, right? Now, all of a sudden, you're going, wow, look at this pre-market consolidation back towards the moving average. See the bottom here? You can barely see it because this is hiding it, but you see the volume at the bottom? When the market opened, this thing just ripped volume. So for me, in this particular example, okay, I got in right at the market open or slightly before the market open, right? If you didn't take this thing right at 9:29 or 9:30, you probably got skipped or missed it. Why? Because there just wasn't a lot here. You could have argued to take it at 64.50. You could have argued to take it at 66, but those were not great entries, right? This was a really good entry at 63 with a stop at 62.50. That's a quick 1,200 bucks. Okay, it's a quick 1,200 bucks. And I sold this thing way too soon, right? Sorry, did I say 62? I meant 62.75. The arrow's in the wrong spot, okay? I sold this thing way too soon. Only got like 1.5 to 1 on my money. All I had to do was wait an extra minute and you could have got another $1 out of it. The point is this. There's not a lot here, right? You take this gap and you go, wow, I really like this gap. All right, it's opening right where this red line is, and you're going, this is a really nice gap. Our job is to find an entry. And then if you didn't look at the pre-market chart, this is what you were basically seeing. Not much is here, right? Not much is here. So now you take a look at another example, okay? Here's a stock right here, all right? And this is old, as you can see, but it's at $22.50. It's a nice triple top pivot on the 60-minute chart, all right? And then it does this and then rips. In fact, it gaps up. I think that's the next day. But the point I'm making is if you don't take this, where else are you buying the stock? Up here at 23.60. Right? This is a pre-market breakout, okay? Pre-market. So you're going to get in right before the market opens or right after the market opens. Basically, you're going to get in at 23 bucks. With your stop down here at 22.80, you could go 22.75, your choice. And this thing rips $1.20 in 15 minutes. Could you buy the buy setup? You could, right? It's not terrible, but the stock's already moved up $1.20. $1.20 on a $23 stock. That's 5%, something like that. And then it pivots, pulls back, and goes higher. So what do? Take it right at 23 bucks. Look at it, guys. Look at the timestamp. 9:30 and 7 seconds. I got in this thing 7 seconds into the day, right? 7 seconds into the day, okay? And it filled me from 23.03 to 23.09, all right? And got out my last little bit at 23.55, all right? The point is this was a beautiful pre-market pattern that didn't actually trigger till the market opened, okay, 7 seconds into the day. Now, I understand, I'll repeat myself, I understand that not everybody is wired or geared to be entering trades 7 seconds into the day. I get this, but you have to realize this wasn't some random close your eyes and hope for a good result. This was a beautiful, absolutely stunning pre-market base. If you had seen the same base at 10:45 instead of 9:30, you would have taken it. But because it's at 9, it's pre-market, people are like, no, I don't want to take it. I look at it because of the volume and because of the beautiful pattern as a valid trade. All right? So using the pre-market can be very beneficial, even if you don't take the trade. We talked about it a couple minutes ago. The reason it can be beneficial is because it'll also let you know what the high and the low is. So if you're going to take a trade during the regular session, you'll know where your target area is going to be. Pre-market highs and lows are significant reference points, especially when they have big volume. I'll repeat, pre-market highs and lows are very significant, especially when they have big volume, okay? So here's another example, all right? No problem, Carol. Have a great one, okay? So here's another stock. We start with the daily, guys. Guys, when you start with the daily, we call it a top-down approach. So we're gapping over a red bar and over this consolidation, right? Red bar, consolidation. This is a beautiful gap. Right? It's a level 2 plus, level 1 minus. It's close to a level 1 gap. It's close. Okay. This, again, you're going to scan 300, 400, 500 stocks. You're going to pick your 10 or 15 favorites. And of those 10 or 15, there's only going to be 2 or 3 that you really, really like. Reginald, there's about 4 of these slides in the book. This particular one and the last 2, yes, they're in the book. Yes. They're formatted slightly differently than this, but they're the same slides. Okay, so you're gapping over this area. Okay, now you're going, wow, that's a sweet gap. Okay, you go to the pre-market chart. Wow, look at this at 82.50. Beautiful. It's like an ascending triangle, but in the pre-market, right? Flat top, higher lows, ascending triangle. 82.50, 82.50, 82.50. Put your stop at 82. If you want to put it at 81.50, that's fine. Immediately off the open, it pops up $1. No, make it $1.50. Pulls back slightly, goes almost $2. Almost $2. Then it pulls back. You're left with this. You're left with the sloppy seconds here. Now, could you buy it at 83.50? You could. The first one failed, right? See the first entry here? It peekaboo triggered the buy setup and then failed right here. And then you get back in and then it worked. Would I take this 3-bar play at 84? Probably not. Why? Because of the pivot. See it? Wide bar, narrow bar, narrow bar. But there's a pivot here. Did it work? Yes, but I probably wouldn't take it because of this pivot. Okay? Here's another example. Gap over a wide range red bar, over a consolidation, rip. Where was the entry after the pre-market breakout? Right there is the market open, right there. This little line here, dot, 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 dot's the market open. $12 with maybe a 20-cent stop. Guys, it went $1 on a $13 stock. Where else could you have bought this? Nowhere is the answer. Nowhere. It's an unbelievably nice gap, ridiculously nice gap. Where could you have bought the stock afterwards? Answer is nowhere. Nowhere. Okay? You guys all want to know, how do you find these ideas? Oh my gosh. Guys, it's not some trade secret. Look at the top of the screen. Dollar gainers. Okay? Dollar gainers right there. Take a look at FIV. Guys, this right here is a picture of pre-market. Pre-market. Notice, I don't have to scan MKL. It has 0 shares. I don't care. I'm not going to look at it. ICE has 20 shares. I'm not going to look at it. RHT, I'm going to look at. ACN, I'm going to look at. FIVE, I'm going to look at. CNAT, I'm going to look at. Why? Because they have highly unusual volume here. Well above average volume. Am I going to look at a stock that's got 0 shares? No, 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 no. Oh, there's one. Lulu's got 400,000 shares. So guys, tell me, there's 41 stocks on this list. 41 stocks. Give me some audience participation here. 41 stocks. How many do you think I would actually look at? Actually click and look at the chart on. Count them for me. I'm going to count them myself now, quietly. All right? Wow, you guys are good. That's it. 7 to 10 is the answer. 7 to 10. 7 to 10. So there's 41 stocks here, and I'm going to look at about 20% of them. So when I say I scan 300 or 400 stocks, I might actually only look at 70 or 80 of them. And from those 70 or 80, then I'll dwindle those down to 10 or 15. Right? So you look at these. Most of these I'm not even going to look at. They have no volume, no volume, no volume, no volume, no volume. I'll look at PSX, maybe ERX, Lulu, okay? CNET, 5, ACN, RHT. Maybe I'll take a quick peek at PXD. Maybe. All right? Maybe. Okay? If it's got less than 4,000 or 5,000 shares, I usually don't look at it. Okay? Now, does that mean that VC couldn't rip today? Of course it doesn't mean that. But it's doing me no good in the pre-market. Okay? I suppose I could, Felipe. I could. Probably be an easier way to do it. This particular scan doesn't let me do that. I'll have to write an easy language scan for it. It just doesn't take me long. I guess I've been doing it for a while. So anyway. So now, I want you to look at my thought process in my head. I'm going down this list. I come upon 5. I click on it. Okay? I click on it, and it populates all of this. It populates. So my main focus when I'm looking for my gap is the 60 and the daily. That's my main focus. Okay? So I'm looking at this and I'm going, wow, that's pretty nice. This dot right here is gap. Guys, the market hasn't opened yet. This is all pre-market. Everything you're seeing right now is pre-market. Okay? So we're gapping over this pivot. That pivot's just under $34. It's just under $34 on the 60. I'm looking at the daily. I'm going, wow, look at this red line here. I drew that red line, okay? My goodness, if this stock can get over like 34.50, maybe 35, it has room to 44, right? So the pivot's at like 33.75 on the 60, but then I go to the daily, there's a pivot at like 34.75. But thank goodness the gap is gapping above that area. So I go back to the daily, I go, wow. So here's the thinking, guys. Here's the thought process. If I can get FIVE 5, this stock symbol, if I can get this over 35 bucks, it has room to $44. So what's my job? Find an entry over 35 bucks. It's that simple, guys. It is that effing simple. Gap up over a pivot. I look at the daily, go, when do I clear resistance? 35, 34.70. Great. My job now is to scan for a 1 minute, 2 minute, or 5 minute entry. That is all I'm supposed to do now. That's it. So I take a look at the 5 minute pre-market chart. Hello, look at the 5 minute pre-market chart. It looks gorgeous. Look at that consolidation. 35, 35, 35, 35, 35. I'm going to buy it at 35 off the open. End of discussion. Why? It cleared the 60-minute pivot. It cleared the daily pivot. It's got tons of volume. 76,000 in the pre-market. For this stock is massive. This is a stock that normally would do like 3,000 shares in the pre-market. It's doing like 25 to 1 its normal volume. I'm going to buy it over 35. Guys, tell me that that's not what I do every single day in here. Wait for it. Oh my gosh, we did it on Google today. It's exactly what we do every single day in here. I scan my dollar gainers list, my dollar losers list. I put that list in the chat log. Today it was 8:58 in the morning. And then around 9:20, I put my favorites list in. So wait, this is the gap list right there. And then 20 minutes later, I put in the favorites list. Okay? I put in the favorites list. I sure wish I took every single one of those and held them. Lift over 58.50, it's at 60.50. Right? WM 111.15, it's at 111.70. Google 110.65, it's at 10.35. CNC 52.50, that one's just barely under 52.30. And CRM under 150. I don't know where CRM is at the moment. It's at 149. Okay? My stop, I said it was $5. I was willing to give Google to 10.70. All right?
I was willing to give Google to 1070. All right. And I took only 25 shares of it, which is $125 risk, which is a quarter R risk. I could have upped it to maybe a third R risk. I'll never do more than a half. My point I'm making, guys, is what you just saw on this slide is exactly to the letter of what I do every single day in here. I scan this list. I look at it on the 60 and the daily and I go, wow, that looks good. I put it out there for you guys. And then what? 9:20, I bring up the pre-market 5-minute chart every single day. I scan it and my favorites list is all the ones that have beautiful pre-market charts. Okay? And then you're going to buy this thing, $30, $35. If the market opens, you can get full. If it's pre-market, quarter lot, no more than a half lot. That is the process. It is that simple. Okay, guys? Netflix, here's just a pre-market chart. Guys, look at Netflix under 430. It's all pre-market. Kind of looks like Google. Where else were you going to get this? 424? You got to pay up so much. 430 was the entry on this, right? 430 was the entry on this. Here's another example. Here's another decent gap. It's a little bit, not 8 to 10% gap, but you're gapping over what? A daily consolidation, right? A daily consolidation. My job, find an entry. So I'm taking a look at this stock from the dollar gainers and dollar losers list. Then I'm looking at the pre-market and going, wow, this isn't just pre-market. This is post-market. This is yesterday after market over here. And this is today pre-market. Buy it at 27.50, guys. Doesn't look like much, does it? It's a 5-minute chart, and in 15 minutes, it went $1.50 almost. You had a 50-cent stop or about a 30-cent stop. You went 3-to-1 or 4-to-1 on your money. There's the gap. There's the pre-market. You don't have to enter all these in the pre-market. I'm just telling you, they don't all give you an opportunity. And how about this, guys? What if we have a beautiful gap? Look at the top left. Look at the top left. What if we have a beautiful gap on the daily? Like this, gapping over a red bar, gapping over a consolidation. But there's nothing in the pre-market. Then what? Then what? You have to wait. No pre-market info, no pre-market edge. You have to wait. What do you get here? You get a little 5-minute buy setup, another 5-minute buy setup, little pseudo, not quite, not really a 3-bar play. So you get a buy setup, wait for the buy setup. You have to let that go. Why? Because you don't have any pre-market edge. So wait for the buy setup, wait for the buy setup. That's what you have to do. Plain and simple. So not every stock is going to give you some tremendous pre-market edge. Okay? But go back. It helps you stay out of stocks that will likely pull back at the open. All right, there's a couple of those examples in professional trading strategies. There's an example of a stock in professional trading strategies that gapped down and we actually went long on it because the pre-market chart got climactic. The pre-market chart got climactic. If you hadn't been looking at the pre-market chart, you wouldn't have seen how beautiful of a pattern this stock was. So we bought it off the open instead of shorting it because it sold off so heavy. It helps you get into stocks earlier than you normally would. Remember, though, they have to have above average volume. And by getting in early, you're not going to miss the move, even if you only have a half lot. It's better than no lot, okay? It also helps us stay out of trades, guys. It really does. If a stock is that extended in the pre-market, I'm not going to take it. You're going to have to wait. You're just going to have to wait, okay? So, any questions?
To get more great educational content, subscribe to the Live Traders YouTube channel. This way you'll get email alerts every time I upload a new video.